Hi there, very good morning. Welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar and Snehi Shah. Over the next 1 hour, we'll get you all that's been happening in the global markets and also tell you about the domestic cues that you must watch out for and also take you through all the stocks that are going to be in focus today. So let's get started with an eye on the globe and see how the Wall Street fared overnight. Well, contrary to the trend, US market did open this week on a weak note, that is December on a weak note, and ended the 5-day winning streak as of Monday. This as the risk-off sentiment returned back to Wall Street. Persistent inflation worries, stretched valuations, and questions around AI spending, they've pressured the stocks over there. The S&P 500 fell about 0.5%, the Nasdaq slipped about 0.3%, whereas the Dow, that dropped more than 400 points, or just about percent to end the day at that 47,289 mark. Now, crypto stocks, they actually led the declines after Bitcoin sank 6%, which is its worst drop since May this year. We talk about Coinbase and Robinhood, they fell over 4%, whereas tech names like Alphabet, Palantir and Broadcom, they also pulled back. Gold and bond yields moved higher as investors sought safety. Now, despite a soft November for tech, both S&P 500 and Dow still notched small monthly gains last month. Now, looking ahead, markets are focused on the Fed's December 10 meeting, with the traders now pricing in about 87% chance of a rate cut. Now, remember, historically, December is one of the market's strongest months, often providing a tailwind into the year end. But for now, they did start December on a weak note. Now, let's also put the spotlight on what's happening in the world of commodities. Now, oil that did end climbed actually more than 1%, driven by geopolitical tensions and some supply concerns. If you talk about Brent, it was at that $63 per barrel mark, whereas the WTI closed close to this $59 per barrel mark on Monday. This after Ukrainian drone attacks on Russia's shadow fleet, US restrictions on Venezuelan airspace, and OPEC Plus. All of these kept production unchanged for the first quarter of 2026. Now, analysts are saying that the market is turning optimistic as demand is staying firm despite fears of a supply glut. Now, supply worries, they, as I said, have risen after the damage to a loading point at the Caspian Pipeline Consortium terminal, which handles about 1% of global oil flows. Now, that's about gold. So, steady moves over there on Monday. And this morning also, we have seen pretty decent moves for gold, for oil, my apologies. Other than that, if we put the spotlight on the yellow metal, gold actually jumped to a 6-week high yesterday that was supported by a weaker dollar and also rising expectations of another rate cut following the Fed's December meeting. And spot gold, like I said, was above $4,239, and silver hit a record high yet again, up about 4%. Now, traders, as I said, are seeing an 87% chance for December rate cut. And on the back of this, gold and silver have been seeing strength. However, this morning, they scaled back some of those gains. So, yes, that's about gold and oil commodity markets. Both of them gained yesterday. But as of this morning, gold has seen some bit of a scale back. So yes, that's about some of the key commodities that we were tracking this morning. But let's also now put the spotlight on Bitcoin, which is actually in deep red after its worst single-day drop since March. Now, the sell-off in crypto widened, with Bitcoin sliding 6% to around $86,000 and Ether losing over 8%. Why? Now, the pressure intensified after People's Bank of China warned of illegal crypto activity that's dragging down Asia's digital asset stocks. Now, analysts say that $400 million exchange liquidation and extreme leverage, sometimes up to 200 times, are fueling this kind of a turbulence that's raising fears of more forced unwinds if the prices don't stabilize. Moving on, let's put the spotlight on some macros coming from the US. Now, US manufacturing, that remains struck in a contraction for 9th straight month, with the ISM PMI slipping to 48.2 in the month of November. Factories, they are battling weak orders, rising input costs, and continued tariff pressure as well, with some transportation equipment firms directly linking layoffs to Trump-era duties. Now, only a handful of industries are still expanding, while most report subdued demand, export hurdles, and ongoing policy uncertainty. All right, then let's move on and talk about the pharma space. Now, US has struck a zero-tariff agreement with Britain covering key pharmaceutical products, a move that is aimed at lowering costs and smoothing transatlantic drug trade. Now, the deal comes as the pharma giant AstraZeneca, the largest company on the London Stock Exchange, continues to spar with the UK government over its pricing rebate scheme. Washington says that Britain has now committed to cutting the rebate rate to 15% in 2026. Right, time again to shift to some macros. Now, Japan's governor, Kazuo Ueda, has delivered his strongest signal yet that a rate hike could come at the December meeting, saying that the board will weigh the pros and cons of tightening as inflation stays above the target and wage momentum keeps on building. He has argued that any move would still amount to easing off the accelerator, not applying the brakes, with real rates deeply negative. Now, his remarks sent the yen and the short-term yields higher, with markets now pricing in, like I said, an 80% chance of a December hike. Time now for some more macros from South Korea this time, and inflation over there has eased slightly to 2.4% in November, broadly in line with expectations, but still above the Bank of Korea's 2% target for a third straight month. Now, rising food and services costs, especially a surge in fresh produce, all of these have kept price pressures elevated. Now, with the won still weak and processed food prices sticky, the data strengthens the case for the Bank of Korea to hold rates at 2.5% for longer. Markets are now expecting just one more rate cut early next year before a prolonged pause. Shifting focus to the auto sector now, South Korean auto stocks, they jumped after U.S. Commerce Secretary Howard Lutnick confirmed that Washington will cut tariffs on Korean vehicles to 15%, retroactive to November 1st, and remove duties on airplane parts as well. Hyundai, Kia rallied up to 5% as the Kospi outperformed in the region. Moving on, let's now talk about the aviation sector. Now, Airbus shares, they tumbled as much as 10% after the company uncovered a new quality issue affecting fuselage panels on dozens of A320 family jets. Now, deliveries are being delayed, though aircraft in service, they appear unaffected as of now. The setback comes just after Airbus scrambled to fix a massive software glitch that disrupted more than half of its global A320 fleet over the weekend, that's grounding jets across key travel markets. Moving on, now let's put the spotlight on Tesla, which is losing streak in Europe, and it has deepened in November for Tesla, with new registrations plunging more than 50% in major markets like France, Sweden, and over 40% in Denmark, the Netherlands, and Portugal. Now, this slump dragged Tesla's regional market share down to 1.6%. Gains in Norway, where sales nearly tripled, in Italy weren't enough to offset the broader weakness as competition from Chinese EV makers intensifies and consumer sentiment cools off. World of sports now, 6 teams and 7 action-packed days. Indian Pickleball League, launched by the Times Group and inaugurated by Delhi Chief Minister Rekha Gupta on 1st of December, will witness high-octane matches spread between 1st to 7th December at the Indira Gandhi Indoor Stadium in New Delhi. Now, 6 teams competing in the inaugural Indian Pickleball League for the top honors are Mumbai Smashers, Hyderabad Royals, Lucknow Leopards, Chennai Super Warriors, Capital Warriors Gurgaon, and Bengaluru Blasters. In fact, here's what Delhi Chief Minister Rekha Gupta had to say about it.
भारत हमेशा से खेलों का देश रहा है। नई नई गेम्स को समझना, देखना, खेलना हर भारतीय का चार्म रहा है। और जब से देश के प्रधानमंत्री आदरणीय नरेंद्र मोदी जी ने स्पोर्ट्स को भारत का कल्चर बनाया है, उसके बाद से तो हर भारतीय की ये इच्छा रहती है कि हर तरह के स्पोर्ट्स में वो लोग इंटरेस्ट लें और उसमें इन्वॉल्व हों। आज टाइम्स ग्रुप ने ना केवल इंडियन पिकल लीग को ऑर्गेनाइज किया है, बल्कि एक पूरा एसोसिएशन खड़ा किया है, पूरा फेडरेशन बनाया है और एक नया गेम हमारी भारत की खेलों की लिस्ट में जोड़ा है।
Okay, that's the word coming in from the Delhi Chief Minister, but we had Times Group MD Vineet Jain in conversation with our colleague Karishma on the growth, progress and rising popularity of the Indian Pickleball League and the sport itself. Listen in.
I'm extremely excited for this special day. I'm thankful to the Chief Minister and the Delhi Tourism to be coming here and encouraging the sport. I'm extremely excited because today is going to be an amazing day. We have 6 teams playing and they're going to all fight to win. But we all have to remember, the team owners, all of us have one common mission to make pickleball one of the most popular sports in India after cricket.
And so you spoke about making it the most popular sport. You know, it is growing very, very rapidly in India, and all the players, all the team owners that we've been speaking to have been only praising the Times Group for making sure that this sport grows even more rapidly in this country. So this is an initiative that is now taken shape and now is being praised by everyone. So like you said in your speech, we have raised the bar and now we are trying to rise above it.
That's right. I mean, this is just the beginning. This is the beginning. The league will encourage young players across the country to start playing, and we're going to take this to grassroots. We're going to start many small competitions at the local level. So this league will always be remembered. It's a historical moment. And to start the momentum, we already offered 500 seats to school children in Delhi public schools, so they can come and watch the sport and get inspired and play.
It will be inspiring, sir. Thank you so much for speaking to us and making sure that pickleball in India grows very, very rapidly.
Thank you. Thank you so much.
All right, so that's the word coming from Times Group MD Vineet Jain. But moving on, each team has a male and female international superstar, Indian superstar and rising star with a unique and innovative team concept and player categories as well. Let's listen into some of the reactions from owners and players on this league.
You know, we are all very, very excited, and I'm very thrilled to be a part of the Lucknow Leopards team. Lucknow is a, city. Uttar Pradesh is a, it's full of talent waiting for the right platform. And I think with the IPBL, this is just the right stage that they've got. It's the right blend of, world-class coaching, the top Indian players, seasoned international players. So we are very excited, and yes, looking forward for all our teams and all the players.
This league is mainly focusing on the Indian players, so I'm happy whoever took the initiative to do that. I mean, I know it's a Times Group and association that we are part of, but great job, guys. Thank you for doing this, promoting the Indian talent at such a big level. I think this is the push that Indian pickleball needs, and here we are.
First of all, I'm really grateful for being here, and I'm really excited, and I just practiced hard for this league. I wanted to win this one. I'm going to give my 100% to the win.
And what would it mean for you to win this league, to get the Indian Pickleball League right on the map?
So it's the first Indian Pickleball League. So yeah, that's why I want to be the first winner of this league.
And let's also talk about the Times Group that is organizing this league. The league has been launched by the Times Group. What do you think about, their efforts to promote pickleball as a sport in India?
They are just giving 100%. They are really good. Times Group. The media coverage is such a great, and I'm really liking Times media and everything.
Arjun, thank you so much for speaking to us and wishing you all the very best for the league.
Thank you so much.
Okay, so that's all the action on ground, but Times Network's Karishma Singh, who is covering the league, has filed a report. Let's take a look.
The inaugural edition of the Indian Pickleball League will establish Delhi as the epicenter of India's next major sporting revolution. The event will bring together top Indian and international players, franchisee-owned teams, and millions of fans through live and digital platforms. Karishma Singh in New Delhi with Vijay Gopal for Times Now.
All right, so that was an interesting report that Karishma has filed. Now catch all the live action of the Indian Pickleball League, that is IPBL 2025, from December 1st to December 7th, 2025 on Zoom TV. Mirror now from 2:30 p.m. every day. Now, in addition to TV broadcast pickleball, now the world's first dedicated pickleball TV channel available on CTV and digital platforms will also showcase the league. Now, viewers in the Indian subcontinent can watch the live streaming of IPBL 2025 on the YouTube channels of Pickleball Now, Sports Now and Zoom. with me, Kanishka Sarkar and Snehi Shah. Time now to take a look at how the Asia Pacific markets have opened up, and it's a rather good day coming in for the markets, except a few markets where we are witnessing a bit of a downtrend. Let's see how Japan's Nikkei is doing. Well, 0.5% of uptick over there at that 49,551 level. Hong Kong's Hang Seng Index also trading in the positive territory, 0.8% gains for that index, trading close to that 26,156 mark. So that's about Hang Seng 26,233 actually, 0.7% gain over there, 200 points uptick. Now South Korea's Kospi Index, that's also trading pretty well in the green. It's actually leading the gains on the Asia Pacific front, up 1.5%, very close to the 4,000 mark. Now remember, shares of South Korean auto companies, they are the ones that are rising the most. This because US has confirmed that they are going to lower tariffs on autos to 15% on South Korea, and that would happen retrospectively, and hence the market is rising, especially driven by auto stocks. Now, if you put the spotlight on China's Shanghai Index, that's down a little bit, down tick of about 0.3%, close to that 3,898 is where the index is at. So yes, mixed moves, largely positive, but yes, that's how the Asia Pacific front is. Now, if you talk about the Nifty, we did manage to end above that 26,175 mark, but yes, we gave up that all-time high levels that we touched yesterday. But so yeah, it was a swing trade yesterday as well. We scaled back from those high record high levels. Profit booking is what we saw, but for today, absolutely flat moves is what we are expecting at the open. GIFT Nifty suggesting just about 3 points of a decline at the start. So yes, very muted moves is what we are expecting for the Indian markets later today, despite positive Asian cues that we have been tracking.
Okay, so absolutely flat start penciled in for us at open. But remember, that was not the case yesterday because we opened at a fresh record high for both your Nifty and Sensex. Similar was the case for Nifty Bank and the entire mid-cap pack and the Nifty Auto group of stocks. So some pockets of the market were doing phenomenally well yesterday until the midday mark, when the pressure and profit taking started to seep in, and we dragged lower to the day's lowest point. And above Nifty, absolutely flat with a cut of about 0.1%. That's how we've shut shop yesterday, around that 26,175 mark, like Kanishka was saying. But some of the major drivers of the Nifty yesterday were the auto stocks on the back of better than expected auto sales numbers. Tata Motors PV was up about 2%. Maruti Suzuki, Eicher, some of these stocks did very well. Other than that, BEL, HCL Tech, Kotak Bank were some of your top Nifty. On the flip side, Max Health was under tremendous pressure, a 3.5% cut over there. Interglobe, Bajaj Finance, Sun Pharma, Trent continues to be under pressure. If you take a look at the advance decline ratio, it was steeply in the favor of the advances in the first half to an extent of a 2:1 ratio between advances and declines, but ended up quite even Steven, and in fact in the favor of the decline. So quite the swing trade we saw yesterday. In terms of sectors, auto, metal, IT did well. PSU banks were holding okay. You had energy and bank on the flat line, but FMCG, media, pharma and realty was your top loser. A 1% cut on the realty index is something we've seen. But the one stock we need to talk about again is Wockhardt on the back of their drug Xenic getting the US FDA nod, and on the back of that the stock was up about 19%. At one point of the day it was also locked in 20% upper circuit, slightly lower from there, but 19% uptick on something like a Wockhardt was a big move coming in after the midday mark yesterday. So that was one to talk about. JM Financial, IEX, these stocks well. On the flip side, pressure continued on Whirlpool of India after the block deal we saw last week. Wellspun, Newland Labs, KPR Mills, Max Healthcare, these were some of the top losers. So that was what the market texture looked like yesterday. It's the weekly Nifty expiry today. So let's see how the markets pan out. We've had weaker than expected IIP data also post-market yesterday. So the market will be reacting to that. So let's just buckle up and see what kind of trading day we have ahead of us.
Absolutely. So very muted start is what we are expecting for now. But which are the stocks that are likely going to be on the move? Ashesha is here to take us through that list. Ashesha, good morning.
Good morning, and first let's talk about Bajaj Housing Finance, because promoter Bajaj Finance is looking to sell about 2% stake in a company via a block deal which is expected to happen today. Now the floor price for this is fixed at 95 rupees per share, implying nearly 9.5% discount as compared to yesterday's closing price, and the total deal size is likely to stand at about 200 odd crores. So on the back of this block deal which is expected to happen, keep out on Bajaj Housing Finance in trade today. Meanwhile, we also have Bank of Maharashtra OFS, where the government is looking to divest 5% stake in the company. So 5% is the base offer with an additional 1% green shoe offer that the company has. So the total size could stand at about 6%. Now remember, it will be open, the OFS will be open for non-retail shareholders today, and it will be open for retail shareholders tomorrow. The floor price is 54 rupees per share, implying 6.5% discount as compared to yesterday's closing price. The total value or the total transaction size could stand at about 2,500 odd crores. So on the back of this OFS, keep an eye out on Bank of Maharashtra as well. Perhaps we could see some bit of negative reaction on both these counters. Bharat Dynamics, meanwhile, on the back of an order win, positive development coming in for the company, where they've said that they've bagged additional orders worth about 2,460 odd crores since the 13th of November. And major orders include ATGMs and SAM. So on the of big order win that has come through that the company has disclosed the exchanges, keep an eye out on Bharat Dynamics as well. Afcon's infrastructure, meanwhile, 884 crore order that has come in the month of November. And Raymond Realty, they have gone ahead and launched Invictus by GS in BKC Mumbai, and the total revenue potential of this particular project stands at about 2,000 crores. So on the back of this, Raymond Realty could also be in focus today.
All right, so that's Raymond Realty and several other stocks that are going to be in focus today, but there's lots more. In fact, let's start with MOIL. This one is going to be in focus because ferromanganese ore prices, both for more than 40% and less than 40%, the price increase has been about 3% effective December 1st. So this one is going to be in focus, a positive development here. Next up on the list is NMDC. This one is in the spotlight today because iron ore output has increased 11% in the month of November, and sales have risen by 4% in the month gone by. That's what the company announced after market hours, and hence this one is going to be in focus. Now moving on, let's put the spotlight on some auto counters which are going to be in focus on the back of November sales data that they have been reporting. First up, Force Motors. Now sales have come in at 2,883 units for the month of November. That's a solid 53% uptick on a year-on-year basis. However, exports, they have seen a bit of a decline over there, a 20% decline as far as the exports are concerned. 118 units is what they have sold. Now let's talk about Hero MotoCorp as well. Above estimates number is what they have reported. Very good set of numbers. 6 lakhs units is what they have sold. A solid 31.5% uptick is what they have seen on a year-on-year basis. Is well above the estimate of 5,92,500 units. So yes, good sales number over there as well. Exports also solid up move on exports. 70% uptick is what they have seen. So yes, Hero Motors is also going to be in focus on the back of this solid November sales data that they have reported. And lastly, there is HUL, which has seen a change of guard. Vandana Suri's is going to take over as the ED of Home Care India with effect from January 1st. This as Srinandan Sundaram he is going to take as the CEO of Unilever International. So yes, 2 management changes coming as of January for HUL, and hence this one is going to be in focus as well.
Okay, lots of stocks to watch out for, but also the thing you should be watching out for is our stellar lineup for you today. Let's start by talking about what our guest list looks like today. At 9:20, we are being joined by Mr. Mahesh Patil, the CIO at Aditya Birla Sun Life, to understand where the markets are headed, because given the way we've touched life highs and now we're swinging slightly lower, what should one make of this market scenario and what should investor sentiment now look like? Immediately following that, at 9:30, we have Mr. Rajesh Jain, the CFO at RR Cable, joining us to help us understand how their business is shaping up, given copper prices are at all-time high, and what that means for the wires and cables industry. After that, we have Dr. Harin Kanani at 9:40, the MD at Neogen Chemicals, joining us on the company's arms, inking a major new joint venture. So that is going to be a very interesting conversation. But the one you really don't want to miss out today is at 9:50. We are going to be interacting with Dr. Habil Khurakiwala, the founder chairman at Walkhart Group. Remember, we were just talking about this stock, a 19% uptick yesterday on the back of the drug approval from the US FDA, that's the Xenic drug. What this means for the company, what kind of doors it opens, and $1 billion opportunity for the company. We'll discuss all of that with Mr. Khurakiwala at 9:50. At 10 o'clock, we'll shift focus to macros. We'll be interacting with Upasna Chachra, the chief India economist at Morgan Stanley, to get a better sense of the kind of GDP numbers we saw on Friday, the IIP data that we've seen yesterday, and most importantly, the policy outcome one can expect to see on Friday. And lastly, to discuss and break down the November auto sales numbers, we'll be joined by Mr. Kumar Rakesh, the India analyst, IT and auto at BNP Paribas, to make a better sense of which of the auto segments from PV, CV, two-wheeler and tractors have outperformed this time and what's the outlook going ahead. Interesting conversations lined up. A lot is happening. You stay tuned with us throughout the entire day.
All right, so that's a stellar lineup waiting for you. So do watch out and we'll keep bringing you all the interesting conversations ahead. But on that note, we'll slip into a very short break. We'll be right back with more. You're watching Market Cafe with me, Kanishka Sarkar and Snehi Shah. Time now to put the spotlight on India's macro picture. Now, India's GDP growth remains one of the strongest among major economies. In fact, the country's economic engine picked up more speed in the quarter of September, with official data showing that the real GDP grew 8.2% in the second quarter of FY26. That's much stronger than 7.8% posted in the first quarter. Now, this also beat most forecasts, even as the economy faced pressure from US tariffs. Meanwhile, inflation has plunged and October CPI came in at just 0.25%, which keeps India firmly on the disinflation path. High growth and very low inflation together create a confusing but fascinating picture for us. Now, suddenly, nominal GDP has turned into the number that many experts are watching more closely than the real GDP. And here's what experts are saying about it, about India's macro picture. So let's take a look.
Nominal GDP growth being low at around 8.7% or so, if that's concerning, yes, that is concerning, because that's basically reflective of what's happening to the inflation in the economy. And, given that we are aware that CPI inflation is at a low of 0.25%, WPI inflation is in the negative zone, we are seeing that overall inflation situation is very, very big in the country. But that also means that the pricing power is low, and that would get reflected in, probably in corporate revenues also. And the bigger players, they will be able to pass on, they will be able to increase prices, but maybe it would be a challenge for smaller players. So that's one way in which, this low pricing power will impact.
I would say that, at the end of the day, there are certain, forecast errors, which are quite normal. Within a range of 0.5 to 0.25 is a usual forecast error, which we always expect. At this time, when we looked at the 7.4 range or you looked at the 7.8 range, at that time also there was a base effect kind of a forecast error that was taking place. Now, for this quarter, one of the major reasons that a lot of forecasters actually made higher errors was because they were expecting a much stronger impact of the US tariffs to hit the Indian economy. When the US tariffs of 50% were imposed,
Okay, that's a lot to do about the economics of the country right now and the way the economy is trending. But the another pressure point yesterday we saw for the economy was the IIP growth in the month of October that fell to a 14-month low of 0.4% versus 4.6% growth in September. The slump in factory output growth is primarily due to lesser number of working days during the festive season. And talking about specifics, manufacturing growth came in at just 1.8% compared to 4.8% month on month, while mining stood at negative 1.8%. My colleague Mitali Jain is joining us with a breakdown of these IIP numbers and what has caused the weakness this time around. Mitali.
Right, so India's industrial output grew by 0.4% in October 2025 as compared to 4.6% seen in September 2025, highlighting a very sharp moderation in this month. Now, this dip was mainly due to the festive season, which actually reduced the number of working days across the factories. Manufacturing remained stable, supported by a strong performance seen in sectors like metals, petroleum products, and also automobiles. Now, these were the sectors that actually continued to drive output despite the shorter month. Mining saw a mild slowdown while the electricity generation dropped noticeably because of the extended monsoon and also the cooler weather, which kept the power demand lower than usual. Now, if we talk about the manufacturing, so within manufacturing, several industry groups still posted positive sentiments, reflecting steady demand and also healthy supply chains. Now, if you talk about the infrastructure and construction related goods, they were seen the most resilient for this month, signaling ongoing investment momentum, while the consumer goods, if you see, have softened slightly during the festive period. So overall, if you talk about the IIP numbers, they were quite slow, showing a seasonal pause for this month, but core industrial products still continue to hold strong, supporting a stable industrial outlook ahead.
All right, so that's the breakdown of all the numbers, but we also caught up with some experts to understand what they are making of the slowdown. What is the IIP data for the month, for the quarter, meaning for them? Let's take a look at what they had to say.
I would have expected a number to be higher. In fact, we were looking at a number of around 2%, at least 2.5%. This is primarily on account of the fact that when we are talking of GST and the impact on industry, there should have been an upswing in terms of production of consumer goods, because we had known that the coal sector had virtually a flat growth for the month of October, but we were a bit more sanguine about what would happen in the consumer goods side. Especially so, we were aware of the fact that there would have been an inventory build-up, which would have come in the way of production.
Generally, the consensus was that there will be a slowdown in IIP growth. This is more, yes, it's less. The growth rate is lesser than expected, but there are a number of factors. One, IIP tends to be very volatile. It's still on the old base. Secondly, there is the loss of working days. This time, Diwali was in the middle of the month. Last year, Diwali was towards the end of the month. So that helped in last year, the number of working days in October were higher. And there was also an adverse base. So all that tends to impact production activity.
Okay, so that's the word coming in from experts on our IIP numbers that we saw post-market yesterday, much below what the street was expecting. But let's keep it going with macros, because we had more data points that trickled in yesterday, and one of them was the current account deficit number that we saw. Now, this in July to September quarter narrowed to $12.3 billion, or 1.3% of GDP, from $20.8 billion earlier, or 2.2% of the GDP in the same quarter last year. So at least this deficit is looking positive today. The moderation in current account deficit is largely on account of lower merchandise trade deficit, which narrowed to $87.4 billion from a year earlier. So that is the kind of move that we've seen when it comes to this end of the macro data that we've been tracking, and at least the deficit reducing is coming out as a positive for the economy.
All right, so that's the current account deficit. But now let's talk about GST collection as well, which for the month of November increased marginally to 1.70 lakh crore rupees. That's showing steady consumption despite a slowdown in domestic revenue. Now, gross collection grew only by about 0.7%. Now, in November, overall consumption increased significantly. My colleague Prakash Priyadarshi is here to take us through all of the details of this latest data.
Well, the November GST collection of rupees 1.70 lakh crore is worrying for the government in terms of meeting its overall tax collection targets for FY26. However, it is direct impact of the comprehensive tax rate rationalization under GST implemented on September 22. Government sources have informed that the November GST collection figures represent the first full month data following comprehensive GST rate rationalization, which was expected as the GST collection would take a hit after massive rate cuts. Sources have also informed that these numbers give us confidence and optimism about next generation GST reforms. Yes, there is fact that the gross GST collection has increased only by 0.7%, but there is significant growth in overall consumption pattern. The government data shows that the taxable supplies grew by 15% in September-October 2025 compared to 8.7% in the same period of 2024. Along with that, the bus and passenger car sales registered 20% growth in September-October period compared to 12% in the same period of 2024. In addition to that, tractor sales registered 17% growth versus 11% in the same period last year. Medical devices, for that matter, recorded 19% growth in 2025 compared to 16% in 2024. Yes, there is a fact that the gross GST collection grew only by 0.7% in November, but the government is hopeful that the consumption pattern would increase further. There will be significant growth in consumption pattern, and that will help the government to mitigate the overall rate cut impact.
Okay, Prakash, thanks for taking us through all of those details. So yes, it's been a slurry of macro data that we've been tracking yesterday in the market and after that as well. But let's refocus. And industrialist Anil Ambani has moved the Supreme Court challenging an order of the Bombay High Court, which upheld the State Bank of India's decision classifying his and Reliance Communications account as fraud. My colleague Charu is joining us with more details about this matter. Charu.
So let's understand this chronologically. What happened in 2012 to 2016 was SBI had given out several loans to Anil Ambani, Arcom, and several other companies under the group Reliance. But what happened was that by the end of year 2016, Arcom became a non-performing asset. Then an audit was conducted by BDO India around the year 2017, and subsequently the State Bank of India marked Anil Ambani and Arcom as a fraud tag. Now, what happened after this was that the Supreme Court of India gave a ruling in the year 2023, which said that if any party that has been tagged fraud has not been given an opportunity to respond to such a tag or has not been heard properly before being given this tag, then this tag will not hold any value. After this judgment, Anil Ambani got some relief and the tag of fraud was taken away, and were back to normal. However, subsequent to this judgment, State Bank of India went ahead, gave out notices to Anil Ambani and started the entire process again in the more detailed manner, and even went up to the Central Bureau of Investigation, that is CBI. Now, what has happened here is that after all this happened and the tag was given again to Anil Ambani, he went up to the Bombay High Court saying that this tag should not be given to him. However, the Bombay High Court found no reason or merit in his appeal and felt that there is no reason to interfere with the decision of SBI. Now, the industrialist is likely to approach the apex court of the country, that is Supreme Court of India. While he has decided to go ahead, the listing date has not come as of now, and we'll keep the developments rolling and keep you informed about what happens next.
All right, thanks, Charu, for that update. But moving on to the banking space now, and the government will offload up to 6% stake in Bank of Maharashtra through an offer for sale that opens today for non-retail investors, with the retail tranche scheduled for Wednesday. Ankur is here to take us all of the details.
Yes, the government has decided to offload 6% stake in Bank of Maharashtra. If you take the current market prices, it will fetch government around 2,600 crore. But more importantly, the bid is starting right from Tuesday, and that is for non-retail investors. And for retail investors, that will start from Wednesday itself. Now, he has informed that 5% is the option of divestment and 1% is green shoe option. So overall, it becomes 6%. Now, this is part of the broader strategy to align with the minimum public shareholding norms, whereby currently government holds around 79.6% stake in Bank of Maharashtra, and it has to reduce to below 75%. So that is a step which has been taken in that direction, but that also opens the floor for other banks where government stake is above 75%, and that includes Indian Overseas Bank with 94.6% stake, Punjab and Sindh Bank at 93.9% stake, also UCO Bank, as well as Central Bank of India, where government stake is more than 75%. It will be interesting to see how soon government takes a decision on these banks as well.
Okay, Ankur, thanks so much for taking us through that. So yes, other than Bajaj Housing Finance and Bajaj Finance being in focus on the back of block deal, Bank of Maharashtra is also going to be in focus. But on that note, we'll slip into a very short break and bring you more stock-specific news and updates on the other side. Market Cafe, let's talk about a stock that's going to be in focus today on the back of some brokerage action coming in, and that's going to be Trend. Now, if you take a look at what the news here is, you have Bernstein that continues to maintain an outperform rating, but they have cut the target price to 5,000 from the 6,100 rupee per share target price that they had for the stock earlier. Some reasons why they have done this: they believe that Trend's revenue trajectory has left investors searching for a bottom. company's reticence makes it difficult to appreciate issues, and they also believe that Trent's revenue growth is now at the bottom. So that is one key concern that Bernstein is flagging off bright and early this morning on Trent. They continue to maintain their EPS target of 83 rupees per share in FY28 at an unchanged 60 times multiple. So if you take a look at some reasons why they're talking about this pressure that they're seeing in the target price for Trent, they've said that first of it is going to be the store count. Store network over densification seems to be a key reason right now for the sales drop that Trent is seeing, and channel checks indicate negative sales growth for many of the already densified stores. The other reason why Trent on the west side front could be facing competition could be facing pressure is because of Zudio competition, because competition is following Zudio. Yes, that percentage is still small, but still Zudio is taking away the larger market share. 27% of their overall 27% of the overall Zudio stores are having a pin code overlap with other stores of Trent. 358 stores of Ustar, Style Union, Own Plus D, Intune have pin code overlap with 27% of Zudio stores. So these are the other brands that fall under the Trent umbrella. Let's understand why the overall stress around Trent. We have been seeing this stock under pressure for quite some time now. Over densification of stores and micro markets is something that analysts are flagging off. Increased competitive intensity, plateauing brand affinity, and consumption slowdown is the most important reason that Bernstein is flagging off. They are seeing that recovery could be possible, and here are the drivers that they are naming for recovery. Like-for-like growth for split stores needs to turn positive with a base effect. That is something that they're talking about, and they're also saying that a 3-year 20% CAGR growth in Studio network is important for recovery to come in the overall Trend stock, and improved consumer demand cycle versus west side growth is something that they're also pointing out. Lastly, if you take a look at what they're looking out for revenue, for margins, for revenue, they believe that the key risk remains competitive upsurge, and they build 19% growth for FY26 and 20% growth for FY26 to FY28 CAGR. That's on the revenue front, and on the margin front, they believe that margins have already peaked out. They're already at a peak. Further efficiency gains from here on the margins front seems very difficult, and they've cut the estimates for Star Business, and they factor in the losses from the Zara MD joint venture as well. So that is the these are all the concerns that Bernstein has been flagging off for Trend this morning. We'll see how the stock reacts, but yes, a major target price slash of 1,100 rupees from their initial target price to 5,000 now from 6,100 earlier. That's the cut coming in on Trend from Bernstein.
All right, so that's Trent, and we'll watch out for how the stock reacts to this latest Bernstein report. But moving on, the road activity for the month of November has been muted. However, construction activity, that has improved. And Rabinder is here with all the details and what's happening in the infra space.
Well, as road activity in the financial year 2026 remained muted, but the construction activity has started a gradual improvement on a month-on-month basis and a year-on-year basis. And NHI has awarded only approximately 78 kilometers of road project in November 2025, which is a sharp drop from 440 km in the same month last year, and also lower than 90 km awarded in the October 2025. And on if we look about the year-to-date basis, then awards stand at 468 km across 57 project, which is down 36% year-on-year basis compared to 726 km across 31 project last year. Meanwhile, as per report, the authority has invited bids for 52 projects covering 2,188 km worth around 1.15 lakh crore in FY26 so far, and National Highway Authority has set a much higher internal target of awarding 4,500 km this financial year. And on the execution front, construction activity has started a gradual improvement. It has improved to 292 km in November 2025 as compared to 238 km in the October and 220 km in the November last year. However, YTD FY26 construction remained lower by 8% year-on-year basis at 2,135 km. NHI has exceeded its FY25 construction target by 9%, delivering 5,164 km. Although this was still 15% lower year-on-year basis due to earlier muted awards. For FY26, the construction target stand at 5,000 km. And from a sector standpoint of view, Nuvama remain cautious on this sector road, because the road awards have now been weak for the two consecutive years, and the lack of any increase in road capex in FY26 budget only depends concern about a meaningful revival.
All right, thank you, Ravinder, for that update. Lots happening in the infra space as well. But road activity, that remains slightly muted in November. But with that, we're completely timed out on this edition of Market Cafe. Snehi and I will take your leave, but don't go anywhere. The market will take all the action forward.